Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in the services I provide, please check out the links in the description below for both the Patreon and Discord. Alright. So I am unmuted now, guys. So if you are here live, thanks for being here. If you couldn't make it, no worries. I hope you're watching the recording and you're getting some info out of it. Now let's just hop right on into the charts. We're going to touch on the dollar first. So dollar so far has been playing out pretty much as mapped out. So we have been looking for, after this pull up here and this breakdown, we have been looking for a higher low structure to start to build, and that's what we've gotten here. So we have confirmed higher low pivots here from down here. So it's very clear now that we're either going to go after this high here, or we're going to go into a larger squeezing structure, something like this, okay, where we're going to make another lower high from here and then potentially another higher low. And that's really going to be a mature squeezing pattern, okay, a volatility contraction pattern. So it could be, you could read it as a symmetrical triangle or as a descending wedge, whatever you want to call it. Point is, we are coming into an inflection point over the next coming days for most likely, because the bias is to the upside, so most likely an inflection point that leads to a break up back to test this daily downtrend line. And in my opinion, there's a pretty good shot eventually, after maybe testing once or two times more, the daily downtrend line will likely break bullish, and then we will likely see a nice move going up towards the 105s and then generally back towards the monthly bearish fair value gap, tapping towards 106 to 107. Okay, so I am seeing this coming within a couple weeks to some months here, depending on how fast or slow we're going to move here. But if this is the higher low that does lead to a higher high from here coming into the daily downtrend line, I would then look for a failure here, very, very, very short-term failure to lead to a bullish consolidation to then break out and still get to the same area. Okay, so either way, whether we're breaking out, attempting to make the move to break out now, or if we're going to go through another higher low, lower high sequence, we're still very likely, probabilities would suggest, going to make our way back towards the 106, at least the 106 zone. Okay, so let's go over to the US indexes and see how they're shaping up. Let's take a quick look at the Dow, and then of course we'll take a look at the S&P and the NASDAQ to follow. So let's let this stuff load up here. All right, so we had continuation on Friday of a continuous move down. So we're making our way. We did take out this high here, but we did tap into these equal highs here. So this fair value gap has held quite decisively so far. Now, as I mentioned in the last recap, we're going to come into a decision point, just like with the dollar. Are we going to get a higher low structure start to form, especially as we come into this large candle here, where you see there's a bullish fair value gap right here, and taking out this low pivot here, grabbing some liquidity. This could be a place where we see some demand come in and the Dow slowing down. However, if I'm correct about the dollar, and as long as the inverse relationship continues to hold, as it likely will, we will likely see potentially a slowdown here, but a very temporary move and then continuation lower if the dollar is going to have that breakout going towards the 106 to 107 zone, which is what I see. So I am looking for a move back down towards the 33,000 and potentially back even into the 32,000s. Okay, so I am looking for us to come and really try and test out these lows. Whether we take them out or not is a little too soon to tell at this point, but I do see it being threatened. And the monthly chart of the Dow, in my opinion, is telling us a pretty interesting story. We're clearly in a pretty sizable sideways range here, sideways action. So what I would say is you kind of want to respect this structure until it's broken. Okay, so we can actually trade all the way back down here and then pop right back up and then trade back down. So until we actually break this range, I'm gonna stay fairly neutral. I will say currently, this actually does have a bit of a bull bias to it. Okay, this right here does have a bit of a bull bias to it currently. Now, if we trade within here for a couple more months, or we actually do break down, but namely if we trade in here for a couple more months, it actually will start looking less bullish and more like potential. We're getting ready for some distribution. Okay, so we want to watch here and see if we're going to get resolution in this month or next month. But if we stay here, for example, all the way until like fall, late fall, which is very unlikely, but if that were the case, then we're looking at a very different picture. And I would have to wait and see what the context surrounding the markets are to really justify such an action. Okay, but so far we've been trading sideways pretty tightly for the Dow on the monthly. All right. So next we're going to be looking at S&P. So let's take a quick look at the S&P and the Nasdaq. See how those two are shaping up compared to the compared to the Dow, I should say. Of course, these two have been far more extended, and they have much more decisive moves to the upside compared to the Dow, at least so far. Right. So, as we can see, nice little bear doji here, nice little denial after filling out this fair value gap here, and now we're making our way down. And then for the S&P, I'm actually looking for it to come back to this consolidation, so back towards 4250. I do want to see this consolidation's low get taken out, and I think that's very likely. Once that happens, you may start to see some demand, come in here and then slow down the selling, but eventually we'll probably see continuation. I'm very skeptical we're actually gonna like pop up from here and take out the high. I do think this action here is fairly impulsive for the S&P. So in my opinion, before we have any continuation up to actually challenge these highs, if we're ever going to, then we would likely have to come back down to here and kind of test out this consolidation and this high these high pivots up here. Okay, so that's my opinion so far. So I would say I am still fairly bullish on the S&P on the daily, because of just the move up. I do see this as a bullish pullback for now, but I will say that I'm not overly bullish. I am looking for a pretty sizable pullback, so we want to see 4200 essentially being revisited before any major upside. Next is Nasdaq, and again, all this is coinciding with a stronger dollar, right? So if the dollar were to break down from that structure we had gone over, then you throw all this analysis out the window, because then it's very unlikely there's going to be a lot of selling pressure on any risk on assets. Okay, so for the S&P and especially the Nasdaq, it'd be very tough for them to sell down if the dollar starts to break down. It's just the probabilities are leaning on the sides of a dollar breakout to the upside, and then also a retracement, a correction down for the Nasdaq and the S&P. The Dow, however, like I mentioned, is in a little bit of a different structure, but if the dollar strengthens heavily, maybe rapidly gets to 106, 107, then I would expect the Dow's range to break also to the downside. So looking at the Nasdaq, nearly got to this fair value gap here, just missed it, but it did go after these high pivots here, did wick above them slightly, so it didn't get fully into there and maybe take all the liquidity above there, all the buy side liquidity, but we did have a really impulsive move for the Nasdaq so far. In my opinion, we're likely going to see move at least back down to the orange zone, talking about 14,390 to about like 13,900. So we want to see the Nasdaq have a pullback here. Once we get into here, I would expect some sort of consolidation that will likely lean towards more downside. Okay, it will likely lean towards more downside to ultimately get us back all the way down here. Okay, so all the way back down to 13,000 to 12,900. So around this zone. Once we get into here, if we see any bullish structures, bullish momentum, that's going to be your signal to pretty much look to get long, because then you're going to be looking at another leg up that may not take out this high, but you may actually make another leg up that will look to make at least a lower high. So the risk reward will be wonderful to get into positions if the Nasdaq here is showing signs of holding this level and having a low pivot confirmed and making its way to make a new high pivot, whether that's taking out this high or just making a lower high. So it'll be a great place to look for some nice swing trades at that moment. All right, now let's take a look at oil, see how oil's shaping up. So oil's been pretty much going sideways for quite some time, but if you notice very closely, I mean, it's very janky, it's not very clean, but that's kind of the nature of oil, especially when you're dealing with some fundamental stuff that's going on, namely the war, and obviously you have Saudi Arabia doing their manipulations with OPEC and all that. But if you notice this structure, okay, we have been coming down quite a bit, but this structure is a grind, okay? This structure is a grind. Now, I'm not saying there's actually massive amounts of accumulation here. It's not as much as it looks like, but this level, this zone, pretty much this whole blue zone, is a place of major demand in the long term. Okay, so this is not a day by day thing. This support zone is a multi-month accumulation zone, in my opinion. Okay, so on the daily chart, it's not very clear, how this looks. But if we go to like the monthly chart here, which is gonna be kind of hard to see. Hold on, see if we can get a little bit closer view. This crazy futures wick really makes the chart a lot harder to navigate for oil. So let's get that out of the way. So there we go. So see how the reason why I say there's a major accumulation for the monthly chart. Notice the wicks here. You see all these wicks. All right. These wicks are massive buy-ups. These are massive, massive buy-ups for oil, and this whole zone is playing as that. Okay, so now this month is very interesting because we have about 5 days left, or I should say 6 days left, going on 5, and this would be the first bullish, or I should say positive candle to close if we don't sell down this last week of June, I should say. Okay, so if that happens, it'll be pretty interesting seeing how this closes. Now, it doesn't mean it's gonna, like, we're just gonna, we had a bull candle, we're going up. Doesn't mean that, but it does mean that real demand is hitting here, and the bulls for the first time, the bulls on oil for the first time have won a candle for the month. Okay, they've won one. So we'll see if that actually confirms. But overall, I think this activity is telling you that there is a ton of buyers here over the long term, and we've been doing this for months, right? So there's been 1, 2, 3, 4, 5, 6, 7, 8 months. Okay, so we're going on almost a whole year here. So this has been very, very interesting, and I do think we're actually going to continue to trade here all the way through until nearing the end of July, or potentially I have a window of end of July, end of August. So we pretty much have all of August. I do think there's going to be a massive spike in demand here. Right, so we'll see if I'm right. If not, I still think just on a technical level, we're still going to be trading in here, which is pretty nuts. All right, next is gold and silver. So go back down to the daily chart. Let's take a quick look at gold and silver. See how those two are shaping up. Gold had a bit more of a sell down since last we looked at it, which is pretty much right into the zone that we've been watching it to get into, which is about the 1930 zone to 1890. And so far it's probably gonna stay in here for a little bit, so we're probably gonna break down again and kind of trade within here. So let's actually get rid of some of these doodles. So I've had enough recaps to where it's very clear what we've been looking for. So for me personally, I really like this zone. Now, it's not a place where I think gold's gonna bottom out. I do think gold's actually pretty much destined to at least make its way back to 1850 to get back into these fair value gaps down here at the very least. There is a world where it takes out this low and breaks all the way down here. Now, I'm not looking for that right now, but I will say this: if you're in the swing trade service, I am going to start looking to potentially very slowly dip my toe into the gold, into gold positions. Maybe a gold miner stock here, maybe the GLD or something. Something very small. Start off very, very small, because as we come into these levels here, I'm going to get very attracted to start building out long positions for gold. Because even if we don't have continuation to take out the highs, which I'm not looking for, it's very likely as we're coming into these zones down here, we are going to be looking to make a low pivot, especially on the weekly, and then the next leg up is going to be looking to make that high pivot, which could end up being just a lower high from here, which is fine, right? So if you're swing trading, starting positions down here while looking for a lower high potential to form is going to be a very, very profitable play, in my opinion. So we're getting into an area for gold where it becomes attractive, in my opinion, to start out building a position. So I am looking for more downside, but I am also looking for consolidation in here, and the consolidation will likely have a bearish lean that will likely break down again to take out this fair value gap up here, and then break down into this level and potentially even revisit the 1800 zone. All right, so now let's take a quick look at silver here, see how silver is looking. So silver also breaking down further, a lot more impulsive to the downside as well, right? So what's interesting about silver is, and I think this speaks to its industrial use case, to the upside far less impulsive compared to gold, but to the downside far more impulsive compared to gold. And that's usually a sign of something that has when it has a huge use case in industrials, mainly like green energy, the manufacturers, the businesses that need silver for their products need the price low. So whenever there's a sell down going on in the commodities, or specifically into the precious metals, you're going to see it harder in silver. So just keep that in mind if you're trading silver. And so far to me, I think the selling's nowhere near done for silver. I see this getting all the way back down to 21, sub 22, going to 21.5, maybe 21.3, this zone down here. But I do not see this being over. Now, we did take out this low, so we took out the sell side liquidity here. So we may see it pop up to fill out some of these fair value gaps right here. So we could see some short-term upside here, just like as gold has entered that pretty much demand zone of 1930 to 1890. So you can see a slight increase in price here, and then continuation, just like gold. So very, very similar. So I have a bear bias on both of them in the short term. But in the mid to long term, I can see them both being pretty bullish. All right, now let's hop over to crypto. Let's take a quick look at Bitcoin and see what's going on. So with Bitcoin, so far, I would say it's actually performing as expected, right? So from the last recaps, I have been saying, watch for consolidation to begin here. I was saying it pretty much at this candle right here on the 22nd. Essentially because of this doji, right? So this doji, very, very clearly, indicating a slowdown. Now we had a really nice candle the next day that traded all the way up to about 31,400, almost 31,500. But look how we sold back down, right? And then we couldn't even keep the strength, the upside strength to close above this wick here on this candle. So this is clearly showing you weakness, right? So you had a blast up, okay, doji. So we closed under the low of this candle, and we had a doji. We had a great day after that, but we couldn't close above it. And then we had a day under it again, and now we try to trade through it again and are failing so far, right? So now I'm not saying that Bitcoin's now going all the way back to 15,000. It's actually the opposite. I'm actually looking now for consolidation to happen here. This is actually more bullish than as if it just went straight through. Okay, so now a lot of people who are going to be looking for 32,000 to hold is probably not, right? So if this ends up being a bullish consolidation on the daily, then what you're going to end up seeing is you're going to see over time on the weekly it break right through 32,000 and make its way towards the 33s, 34s. So a lot of shorts are going to find themselves again getting punished. Now let's go up to the weekly real quick, and this is what happens on weekly breakouts. The daily will just continuously make bullish consolidations, and they tend to not be very mature, so you got to be very careful. They tend to validate very, very quickly. So if this is a true weekly breakout with weekly continuation, you're gonna see probably another week candle similar to this, like another bullish candle up going towards the 33k zone. Maybe we may even have the three candle surge here, where we have 1, 2, and then 3 going all the way up to 36, 38. Now we don't know for sure. Point is, you don't want to get in the way of this. We're going to see how this closes today. We have about just over 8 hours. So if it closes like this or better, then it's extremely strong. I mean, it's going to take a lot for this candle to get very weak. If it somehow does get sold down back into, let's say, like the 29,000s, right? So 29,000, 100, 21,200. It's still a fairly strong candle, but the daily will definitely have far, far less implications of impulsiveness. Okay, so you're talking about a move that comes all the way back down to this zone here. Now, this could happen over next week, but if it were to happen, let's just say on this daily candle, we have a really bad sell-off here, that will then put the damper on the impulsiveness. Now, that's very unlikely. What's more likely is we're going to close this weekly candle fairly strong, and we're going to start next week candle fairly slow, okay? Because the daily will probably have to consolidate for a couple of days, 2, 3, 4 days, and then sometime midweek, maybe the end of next week or something, we may get another leg up. And that will coincide with a dollar that is potentially showing, some strength in the short term to make a lower high and then make another low pivot, right? So if the dollar's not breaking out completely, this scenario is much more likely. All right, but overall, I have to be bullish. I do think Bitcoin is going to make its way and show its strength going towards the 30s, 32, 33, and then eventually towards 34, 35. And there is a world where it could get towards like 40 to 42. Okay, so even if it does do that, guys, I just want to be very clear on this. Even if it does do that, that does not mean that Bitcoin's going after its all-time highs. Not at all. Okay. Now I'm not in the camp of like, you know, we're in the bear market, we're out of the bear market. It's kind of irrelevant. But if we are in a bear market and we made our way even all the way up to 50,000, which I am for sure not calling, okay? But if we made our way all the way up here, it still can be a bear market rally if we fail here, okay? But no one knows. No one has a crystal ball. So that's why I always say play the zones, play the liquidity zones. You don't really need to guess much. And always just be nimble, okay? Just be ready to adapt if you're wrong, if your thesis is wrong, and it's going to be wrong. We're all wrong at some point. And just make sure that you start small and make yourself big. All right, that's the way you do it. It's the safest way to do this. So overall, look for upside, but before that, look for some consolidation. We might see a move back sub 30, like 29.8, 29.7, potentially back towards the top side of this fair value gap here, which is about 29.5. But we should be able to hold that if we're going to have a weekly continuous breakout. Continuation on the weekly is key. Okay? All right, that is it for the overview. Again, if you have any questions, make sure to leave a comment pretty much in the Discord, or you can leave it on the comment section of the video. And if you haven't joined the Discord, make sure to join Discord. You'll find the link in the description below. And if you're interested in any of the services, make sure to check out the Patreon or the Discord. I have all the details stored there. All right, guys, thank you for stopping by if you were live. And if you didn't catch it live, don't worry. This will be up today, so you can watch a recording. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.